in fact, a lot of people think the first business loan is, oh, I heard this thing called the SBA. I'm going to go, they'll do startup financing for me, right?
Mm-hmm.
That's when they come. And I'm here to tell you, no, the corner bank's definitely not going to do it. And if the corner bank has an SBA group that does small business lending, up to $5 million, $250,000 to $5 million, that SBA group's not going to finance your startup,
right?
As well,
right?
I mean, so then what do you do?
Are you listening? Damn. Yeah.
You know how we do this. We just get started.
All right. Well, all right. I hope I don't disappoint.
Billy, all the buttons pushed?
Buttons are pushed.
We ready to go?
Let's do it.
Let's do this.
All right.
All right. Welcome to the podcast. We got a special guest today with us, Mr. John. Johnny and I have known each other for 20 years, I would think.
That's
John
right.
Is a banker, and on the I have to, anybody that listens to my podcast regularly, I need to make sure that everyone understands that John's a good banker, because most of them are not, but John is. And so John and I met, turn me up a little bit, Billy, will you? John and I met 20 years ago, right after I had started Senvoy, and I needed to get a loan. Now, anybody that knows my history knows, and John knows this, I didn't know shit. I didn't even know how banking worked. I didn't know how loans worked. I didn't know how you financed a company. I just went out and started a company, figured it out after the fact. And when he, I don't know if you're going to remember what you thought, but just to lay this out, I was in a building. I had started in a little tiny house out off of a highway that they immediately tore down. I mean, literally, this was a house that was barely had doors on it. To call it a house, no one could live in it, so because they were getting ready to tear it down. I took it, put my company in there to start, and then when we left, we had to get out because they tore it down literally to put in a storage unit. And so we moved downtown to Burnside.
Was it Burnside or Sandy?
No, it was
Burnside.
Burnside, into that shitty building. And I don't know if you remember, but like the ceilings had fallen in, and the fucking the carpet was half torn up, and everything was stained, and we were working in the back. You remember that?
Yeah, we were in the back.
Yeah,
working on how to get the deal done.
We were doing $3.5–4 million a year out of that back of that dilapidated, burnt down. I mean, it fucking had, Bill, you wouldn't believe it, had old furniture like stored in it. I mean, we're talking about a Portland building. They've since remodeled it. It's right in the heart of town. But you're talking about it, 20 years ago, a Portland building that'd been around, I don't know, fuck that. That building probably been there for 70, 80 years, 20 years ago. So as the bank walking in, and you're like, oh, yeah, there might be a deal to be done here. You had to be thinking, what in the fuck did I get myself into?
Well, no. I didn't look on the outside. Back then, I just got, I think it was my first job as an SBA lender. And I'd spent from 91 to 99 as a commercial banker, traditional commercial banker.
All right, let's define that so everyone knows what we're talking about. Give us the difference. So you've got commercial banking.
Yeah, commercial banking, business banking. It's, you walk into, you name it, bank, and you want a commercial loan. They'll send you to somebody, and that's just a business banker or commercial banker. And sometimes they segment it out by sales size, under 3 million small business or under 5 million small business. And then commercial banking's like 10 million in revenue through 50 million. Then you have corporate banking, which deals with the larger companies, but the majority of businesses are small business to mid-size commercial businesses, especially here in the state of Oregon.
So backing up even further, so before we get started, the whole point of having John here is we talk about real estate and banking in general for business and how do you finance and all the rest of that. So we're going to get to that. Johnny and I have been buddies for a long time, so I know his background. We're both a couple of Portland boys, but tell us your background, John, so people kind of know where you come from. And
local, grew up here in Portland, went to University of Oregon, got my first real job at First Interstate Bank as a commercial banker. And I was real proud to get that job. There were 2 offered. in the state. And, I don't know if they went through the list and people declined them and they came down to me and said, all right, this guy, he'll accept it. Because my first job offer at First Interstate was to do commercial lending out of Klamath Falls, Oregon. And I don't know if anyone knows where Klamath Falls is, but it's not close to anything.
No.
That's where I think I might have been. Two people might have said no, and they gone, okay, this is our third choice in this guy.
That is, so in that part of Oregon, that is kind of down in the southeast part of Oregon, although you can go, actually, it's kind of like the middle east of Oregon.
Central South,
because if you go to true southeast Oregon, this is kind of interesting for anybody listening. There's a little town called French Glen, and you have the Steens Mountain out there. I've been there. The town is 3 buildings. And it's got a bed and breakfast, and you can't get in there in the wintertime, literally. And it's one of the largest cattle ranches east or west of the Mississippi is down there. It's also the furthest spot away in the continental United States from a major highway.
Interesting.
In all of the United States, French Glen from Klamath Falls is probably another 150 miles. I mean, it's way on towards the Nevada border, the Oregon-Nevada border, which most people don't realize that Oregon borders Nevada. As well as California. So anyway, fucking Klamath Falls is
not close to anything.
Far away and not close to anything, particularly when you're a Portland boy.
That's right. And so that was in 91.
Did you go down there?
No.
Oh.
They put me through training. There's 3 of us. Or excuse me, 6 of us, 3 undergraduate, 3 graduate people that they hired.
What'd you go to school for?
Finance and management.
All right, so this is...
And I was going to be a big fancy investment banker.
Right.
Do all this great stuff.
Turned out,
I went to University of Oregon.
You were too dumb to do that.
That's right, to go this guy. And now you can do business banking. You'll be all right.
Yeah.
But in 91, it wasn't the greatest time. And got this opportunity. I can remember. I was interviewing. They'll give you a list of interviews and people come on campus. And this is before computers and phones and social media.
Right.
And so they kind of posted it up. I remember it was Purina salesman. And I actually went to that. I think, Purina's the dog food, but I'm sure they sell other stuff. And that was one of the jobs that I interviewed for. Because, I got to get a job, right?
On campus.
On campus. I'm graduating.
Right.
And the other one was First Interstate Bank, business banking. I'm like, well, since I'm not going to be an investment banker, this job seems pretty good.
Now, in the day, First Interstate Bank was a big bank, too.
It was.
Yeah.
Yeah.
They got bought out by somebody, and they've come back a little bit. They're a customer of mine.
Are they?
They have one branch downtown.
They've come back.
Yeah.
And I can recall kind of a little lesson I've told my kids. I went to, so it's a pretty popular job opening. You have Purina dog salesman, food salesman, and some other jobs that didn't seem all that terrific. This banking job seemed like a good gig. So they said, you know what, we're going to tell you about the job. Come down to downtown Marriott in Eugene, Oregon, and we'll give everyone a overview of what this job is going to be. And I grew up working at a grocery store. So my dad wasn't fancy. We didn't have suits and ties. So I show up at the Marriott downtown in khaki pants and a sweater. And I walk in there, there are probably 60 people in there, 60 students, all had either suits on or blazers and ties.
And this is back too when that shit meant something.
Yeah.
Because it doesn't mean anything anymore. You can, pretty much look how you want and get away with it today. Right now you can just come in
with a ragtag shirt and tattoos and whatever, and you're fine. I almost walked out because I walked in there and I looked around and I'm like, I am the sore thumb. Yeah. I mean, it is all people, same height, same color, same everything, same suit, no diversity, no anything. And there's the dude in the khaki pants and a sweater. But I stuck around and they went through about 3 different interviews and was offered the job. So quickly, fast forward, they sent me to Portland, Oregon to do 6 months of bank training. And you just followed, there was 3 undergraduate, 3 graduates, or 6 of us, little ducklings, downtown Portland, going through, account receivable financing, real estate financing, credit administration, tax analysis, all these different categories that you need to use when you're at the bank. And so I'm getting ready to go down. That's going to be 6 months, and I'm going to go to Klamath Falls. And they said, you know what? Your job in Klamath Falls is gone. We're going to send you to Prineville. And I'm like,
Central.
Still in the middle of nowhere, but
right. Now
but
you're
I'm about
Central Oregon.
150 miles north, I guess. So,
yeah, outside of Bend.
Outside of Bend. And Bend wasn't Bend like it is now.
No, right. That's right.
And so that's where I started. And then I went, I was young, moved to Prineville, there for 6 months, moved down to Medford.
Dude, Prineville from Portland, even Prineville from Eugene.
No.
I mean, Prineville is an old country town.
It is.
And it's a town, not a city,
So I got my lesson about the suit and tie. So I was working downtown and I wore a suit and tie now. I'm done with the sweater and the khakis because now I'm going to be Mr. Banker.
Right.
I got suit and tie on. I'm downtown, 6 months, suit and tie every day. Go to Prineville. Yeah, I'm a commercial banker. I probably looked like I was 12 years old.
Yep.
But God, I had my tie and my suit, showed up every day. Every Friday was casual Friday. They wore jeans and a First Interstate t-shirt. And I wore my suit and tie on Friday. I did that maybe 2 Fridays in a row. And the manager came over to me and said, hey, next Friday, I want you to wear this shirt and jeans. And he said, and by the way, if you go to the only bar in town, well, there's a couple bars, but I think it was called Cinnabar.
Yeah, it's still there.
It's still there.
Yeah.
Because if you go there, I'm a single guy, 23 years old, because don't wear your tie because they will grab it and they will cut it off. And
that's Prineville.
You might not take favorably to that, and you will not do well if you argue.
Because everybody knows everybody. That's how small a town that is. Did you buy a pair of cowboy boots when you were there?
I did not.
Okay.
I wasn't there long enough. It was during the winter.
Had you been there for a year, I bet you would have had a pair of cowboy boots.
I probably had cowboy boots on.
Yeah.
So
they got a cool old theater there.
I never went to
so when we drive through there, even now, it's like old school, where like if somebody tall sits in front of you, you can't see around them, right? Like it used to be. So it's cool to go to.
Give you an idea of Prineville at that time. So this is December of 91. I drove to Bend, Oregon, which is 30 minutes away, 40 minutes away, something like that, to walk through stores.
Yeah, right.
Because there was a Thriftway store in Ochiko Thriftway, I think, in Prineville, and it closed at 10. And sometimes I'd just go down there and wander the aisles, like look at the magazines and what the hell? It's cold. And I also learned about, I lived in a duplex and the people lived on the other side. It was a family and he was a truck driver, but he drove a Chevy or a Ford, an old one. And it was in the carport and he had an outlet plug into the engine.
Block warmer.
Yeah, and I'm like, what the hell is this guy doing?
He's got a diesel.
What's he doing? And that's when I learned about diesels. I learned that I've got to keep them warm. They're not going to start in the morning.
You know about that, Billy? You plug in the block. It's got anybody that lives in a cold climate has block warmers. So if they're driving diesels.
If it's really cold, they won't turn the engines off. Those keep them,
because that diesel will gum up. It'll turn into jello.
Yeah. So I learned life lessons. Nothing about banking. I just learned life lessons.
You'd never learn that shit in Portland.
There's not a chance.
People in Minneapolis right now are just laughing at us.
Yeah, right. They're going, duh.
No shit. Right. All right. So you got that, and now you're moving on to do commercial banking.
I do commercial banking. I go from Prineville to Medford, which is in Southern Oregon. Kind of a 6-month stint at both parts, and then back up to Portland. And now I'm doing commercial lending. I mean, at that time, you would come in. It's not when I met you. I met you later.
Right.
But a borrower would come in, hey, I'd like to buy this piece of equipment or buy this real estate or something. And the commercial banker, I would do an interview, take the financial information, analyze the financial information. And if I liked it, I do a write-up. I kind of go present it to whoever the approver had to be. I mean, I had like $50,000 approval limit, so it couldn't do really anything. I take it to my team lead or credit administration and have to present the credit. Well, the good thing is I had to do everything. I had to interview, I had to analyze, I had to do the write-up, support the credit, and do a presentation.
And you're getting to know all these different companies.
Yeah. You're getting
all these different industries.
Yeah,
right.
Because you'll learn, and even more specific in what I'm doing now, because I'm really do some odd industries that aren't in favor with traditional banking, but you find out what a manufacturer does, or if it's just a sales company, or if it's a transportation company. There's just the financials are different, the metrics are different, and so you learn all this. But the good thing about it is you learn everything. You're talking to the business owner. Nowadays, you just have salespeople. Like those come out and talk, hey, Jerry, I'd like to bank Senvoy.
Right.
And then they'll just take a credit card out, they'll take an application and they'll send it into a black box and hopefully come back and it says approved or not approved.
And
or
a
something
bot
like that.
gives them an answer.
Yeah, and a bot gives them an answer. So it's really changed. But in 91, 92, 93, that's what I was doing. And really did that all the way. Started with small business credits, smaller deals. And I did it all the way up through 99. And I was doing some larger deals then, still not corporate stuff, just Oregon. There's not that many corporate borrowers in Oregon. I mean, there are, but there's, there's handsfuls.
More now than there was
There's
25 years ago. Right.
And then 1999, I'd switched to 95, went from First Interstate Bank to Bank of America. Here's a good banking story. Banks are great at paying you just enough that you're happy, but you're not
satisfied.
You're not satisfied. You're on they must have a team of people that figure that out. And they know exactly.
Right.
And so in 95, I'm like, hey, I'm doing a pretty good job. I'd like to get a title. I'd like to maybe get an extra week of vacation and maybe, a little bump in my pay. And, no, John, you're doing great. You're doing great. We'll visit that, in the future. Okay. Prove yourself, which I understand. Go prove yourself some more. Prove yourself. Come back. I'm like, hey, here we done. I've done it now. Did everything. Well, yeah, God, we're close. We're close. We'll talk to you. So I'm like, someone from Bank of America said, yeah, gave me everything I wanted. I mean, it wasn't anything. A title. Who cares?
Right. I mean, a title. I love that.
That costs zero.
Right.
AVP to VP. And they gave me an extra couple dollars a month and another week of vacation or something like that, which I never take anyway. And so I went in and I said, give my 2 weeks notice. You guys have been great, but moving on. And then they said, oh, well, we'll give you everything that you asked for. I said, yeah, no, I've already.
Too late.
Yeah. I'm moving on. So that's just a little story about banking. There's no banker making too much money out there. Go to Bank of America, do some larger credits, long story. 99, they go, move to Seattle. We have jobs available in Seattle. No one raises their hand. And I mean, I'm still low on the totem pole, I'm not up there. And then finally they came, they said, you three, your jobs are now up in Seattle. And I'm like, I don't want to go to Seattle.
Forget about having to move to Seattle. For me personally, if you're a Portland boy, born and raised, Seattle can go fuck itself.
Yeah. Well, look it wasn't on the.
No offense, Seattle. I'm just saying. I mean, if you're born and raised in Portland,
it's a very nice town
to visit, but nobody wants to stay.
If I want to go there, I'll go 3.5 hours. I'll go up there, visit, spend the weekend, and come back.
Yeah, that's exactly right.
So anyway, I decided to go up there. I'm dating a woman who's now my wife at the time, and to make that story and see what I can say and can't say. They bought my house. I own a condo up in Washington or on the Columbia River. And B of A said, yeah, you're going. I'm going, okay, well, I don't have any other options. I guess I am going. So they bought my house. And maybe 2 weeks after they purchased my house, I got this offer from a no-name bank that does a niche lending called SBA lending, Small Business Administration lending. And I didn't have. Well, I guess I can say that. I mean, what's the statute of limitation on clawback? 99 is 20 years enough. They didn't have me sign when someone transfers at maybe regular corporations. They don't like to negotiate your house price or your moving, what they're going to pay for or not pay for in the moving, with your manager, current manager, or your new manager. So they outsource it to a third party. And so the third party is the one that bought my house. And I didn't take any money to relocate because I didn't relocate. But as it turns out, as I found out later, because I talked to my old manager, they sold my house for a loss. And they didn't have me sign anything that said, oh, we're going to buy your house, but you got to be here for 24 months.
Right.
That's standard stuff that they would do nowadays.
Sure.
Yeah. Because, I mean, why are they going to buy it and then all of a sudden you bail? Well, I did. So it's one of the few times a little guy
got ahead.
Got it.
You got
it.
By the smallest of margins.
So how thousands of dollars.
So you ended up working for a bank, a little tiny bank, because that's when I met you out of.
So that's,
well, no, because you were working for Transamerica when we met.
That's who hired me. Transamerica Small Business Capital.
Okay.
And I worked there for a year, and then they decided they're out of the SBA business. So 1 year out of the SBA business, they gave you a severance that was terrific.
Right.
But I had to find a job. And so there was another bank. Once I got out of traditional banking, I call it traditional, Bank of America, U.S. Bank.
Big bank sitting on the corner.
Yeah, that's right.
Right.
Once I got out of that environment, I found out there's this whole another universe of lenders, asset-based lenders, private money, private investors, SBA lending. It's its own little niche, small business administration.
So let me interrupt you.
Yeah.
This is what we talk about all the time, and I tell Billy and anybody who listens on the podcast is that the thing that people who have made money understand is that there are ways of getting money that they don't understand. That what rich people understand is how money works, how the game is played, right? In terms of where there's options. And the reality is that the corner bank, 9 times out of 10, I think, and you'll probably can correct me if I'm wrong, maybe 8 times out of 10, you ain't getting your first business loan out of a corner bank.
No.
Right?
No. And in fact, a lot of people think the first business loan is, I heard this thing called the SBA. I'm going to go, they'll do startup financing for me, right? Mm-hmm. That's when they come. And I'm here to tell you, no, the corner bank's definitely not going to do it. And if the corner bank has an SBA group that does small business lending, up to $5 million, $250,000 to $5 million, that SBA group's not going to finance your startup,
right?
As well,
right?
I mean, so then what do you do? And that's a whole discussion to have about how do people start their business?
How do you come up with the money?
Well, I can remember when I met you, you had already been in business,
right?
And you're going, okay, I'm going to grow. I need some money to grow. And a lot of people think you need money for real estate or you need money to buy a piece of machinery. Sometimes you need money to pay payroll because you're hiring 10 new people.
Right.
Or you're hiring drivers. And you're not going to get paid from your routes until 60 days or 30 days.
And this is why you have lines of credit, because you have to pay your employees prior to you recovering the money from your customers.
Right. And
because they'll be on 30 or 40 or 5 or 60-day terms.
And generally, if you're growing, that line of credit really shouldn't be a line of credit. It should be a term loan.
Yeah, right.
Like you're never going to lower your receivables. You're never going to lower your inventory because you're growing. Your inventory and your receivables might be turning. You collect your receivables and you sell your inventory and then get new inventory. Those turn times are probably good, but the level is now, I used to have 50,000 accounts receivable. Now I have 220,000.
Right.
Well, that 220 is never going away. It's on because you're growing. And so I think that if I recall right, you were in a situation where you were growing.
That's exactly right.
And we had to do I don't want to say dollar amounts, but we had to do a permanent working capital term loan.
That's right.
And
which means I just paid it off over X number of years, correct, as opposed to a line of credit that you would go into normally every month and pay it back.
Yeah, because your profits aren't going to catch up to your growth for a period of time. So instead of having to come up with, $50,000 every 2 weeks to make payroll, how about I just lend you a couple $100,000? You pay me back over the next 10 years. So now when the cash comes in, you're not just throwing it right back out.
Right. And that is what I think most people assume is that if you're profitable, what I had to learn the hard way is that if you're profitable, it doesn't necessarily mean that you're generating cash.
Correct.
In fact, the more revenue I had and the more profit I made, the less money I had.
Yes.
The less cash. There's a big difference between making money and having cash. That's why we hear cash flow is king.
Yes.
I'm sure you've seen lots of profitable companies that have no money.
Correct.
I know I've been there many, many, many times because you're growing so fast that you just can't generate enough cash to pay the bills. Yeah. It seems, and I had to figure that out. I had no idea when I started. I just fucking figured if I sold everything as quick as I could, right? Bring all the business in that I could find, that there'd be cash for that.
Let me tell you, and this is a story about you, and without getting too specific, I can recall when you were going gangbusters. I mean, you're growing, your company's always grown. Going gangbusters, you're going, John, where's my cash?
Right.
I got, here I am, millions in revenue and growing. And I can remember coming to the, I don't know, it wasn't your first building. It was the one in Southeast Portland, not your Yam Hill, but the
the second building we were, or actually the third one we were in. Yeah.
And I can remember, and you have to understand, Senvoy, they're courier people, and that's before you had your software that went silent.
Yeah.
People are on the phone, and what were those old walkie-talkie phones?
Yeah, two-way Motorolas.
Yeah, there you go.
Yep.
And I remember visiting you at your business location, and you were on the phone, and you had all your senior management in the room on the phone, calling every customer you had, basically saying, "Pay up."
Well, so that was when I can tell you exactly when that was. That was 2004 when I had that partner, Tom Stearns. I'll use his name all fucking night.
Okay.
I don't know. I'm assuming he's dead now, or hoping. I'm not sure. One
I'm sure
or the
he's
other.
a fine person.
Yes, I'm sure. But remember, he fucked us. He was my controller, if you will.
That. That's right.
And he didn't pay the payables, and he ran up all the receivables. And then he went to my competition.
That's right.
And told me that I'm out of business, which effectively. So imagine, people, this again, business 101 here, that just you don't ever know. I don't think you can be taught this. Meaning, I think you have to experience this or see this happening in order to understand this. So I say that all the time, real world.
I think a lot of things are that way.
Yeah, I think without a doubt.
Someone can tell you 1,000 times this is going to happen.
You can go to school and understand cash flow.
Right.
Until you go and you see a company. Literally, Billy, I had assets of $1.5 million, and I had liabilities of half that amount, and I was going bankrupt. Yeah. I had no money, right? Because the money, while it's sitting on my balance sheet and people owed me the money, that's receivables, they weren't paying because the guy who was supposed to be collecting them wouldn't send the bills out as quickly as he should have, doing all of these, and then not paying the people on the other side, so they're getting way behind. So not only do I have a cash crunch because my money's not coming in, but the people I owe the money to, I'm way behind on. And so then he goes to my major competitor, who happened to call me the next day and tell me that he understood that I was out of business, but he was here to save the day. And so we looked down, and so we kind of gathered around and looked at what we had. And I don't remember who it was, if it was you or somebody, but somebody pointed out, and this is where I really learned how this works. Somebody's like, dude, remember, we have $1.6 million in receivables. Why haven't you gone and collected that? And of course, I had never done anything about that. That had always been stuff that had been handled by this other guy. And so I learned receivables very quickly. So I brought in family, friends, fucking anybody that can make a phone call. And I don't care if it was $25 or $25,000. I collected every penny I could get my hands on.
I remember that.
Yeah.
I just remember walking in the room. I wish I was the one that I can remember telling you.
I don't remember
who.
Somebody told me you have all that money sitting there.
Smart to tell you, but I would have.
Yeah.
I would have said, and that situation is relevant today.
Right. I'm sure it is.
I have I've looked at financial statements on accrual, and that's where the accrual-based financial statements will count when you.
Yeah, let's define that so people know what we're talking about.
So it's
without
a method
getting too far in the weeds,
but
accrual versus cash, I think, is important.
So it's easy to know cash. You go to a gas station, and you give them your credit card, and you get charged $70. They get the $70 right then, and they report it. $70, got it.
For that month.
For that month. And you multiply by 1,000 people that come by. So, $70,000 that month in their cash, in their account. Well, you could sell a widget to somebody for $70,000. I sold $70,000 worth of widgets, but they might not pay you for 30 days, 60 days, whatever the terms are. Well, on your financial statement, accrual will count the 30 grand as sales, like you did it, and the cost of goods sold that you paid it. You may or may not have paid it. You might have payables. And the bottom line is like, oh man, you made, let's say your cost of goods sold was 50%. So you made $35,000 this month. And so you must have $35,000 in cash. Nope. You hope.
Because you might have only collected $25,000 and you have a net,
or 10 of it or 15 of it.
And you have a net deficit of 10 G's in cash for the month, but on an accrual basis, you made money, as opposed to a cash basis using the same math. If you sold 70, you brought in 70. If it cost you 35, you're sitting on $35,000.
Right in the account.
That's just not the way that it works, particularly for new or younger companies.
And I can read a financial statement now. And so when I have a lot of experience now. Back then, I kind of, I had experience, but I've double the time now.
Yeah, sure.
And I can tell you with financial statements what your problems are.
Right.
And even if you're not going to admit to me what your problem is, I can go, oh, so cash tie, how's payroll next Friday?
Right.
No problem. Pulling the old home equity line to put some money in the company.
That's right.
And we'll get to, I've been jumping around here, but that's why financial statements are important and business owners need to know. But I'm always surprised when I get a company that comes in and a lot of people operate off the checkbook. Hey, I got money in the account. I'm doing good. They don't look at or they'll just look at the P&L, the profit and loss statement or income statement, as I call it. And they don't look at the balance sheet. And it might be okay not to look at the balance sheet if it's a cash-based business and you have no debt. It's like, oh, all right.
And again, not too far out in the weeds, but balance sheet versus income statement is?
Well, one lists your your assets and liabilities, and that's your balance sheet, and your equity.
Right.
Assets minus liabilities equal your equity. And then the income statement is, what you sold and how much it cost to sell it, and your operating expenses, and hopefully a net profit or net loss.
Right.
And they go together. There's always a disconnect with small business owners. They just think, oh, here's my P&L and I made $100,000. Let's see the balance sheet.
That was me.
I can remember back in the first. So when we first met, you were like, I'm doing X million a year, and I got this and I got that going on, and we're doing things. And I got new people I'm signing up.
I had a briefcase.
That's right.
I knew how it worked.
I said, yeah. So where's the balance? Where's your not a tax return, because your accountant will prepare that year end. Where's your 6-month P&L and balance sheet?
You just got blinking eyes.
What? You want those? I go, yeah.
Yeah.
Because I know I've done however much in revenue this month or for the first 6 months. I'm like, yeah, okay. So how much did it cost you to provide that? What's the rent on this place? How much is
blink.
I don't know. I'm paying them.
All I know is I'm paying the bills.
So we went through, and you had a good accountant. Did you have your accountant at that time?
Yeah.
Okay.
Kenny. Still with me today.
Is he?
Yeah.
All right.
Yeah.
And I don't know what I can say, not say. So I'm trying not to throw names out there.
Sure.
Keep everything confidential.
Yep.
But he's a good accountant.
Yep.
And, but I'm free.
Right.
He's not free. So, we could look and kind of cobble some stuff together out of, some accounting software that you had, and then have the old CPA take a look at it. But those days it was the financial statement was like one day before it was needed.
Right.
You weren't sitting there printing them and reviewing it and going, thinking about it for hours. And your son, he wants a financial statement. Let's get him a financial statement.
And this is the thing that I've talked about many, many times. And we'll see if Billy remembers from the 130 odd podcasts we've done. What's the 3 most important rules in business?
Know your numbers, know your numbers, know your numbers.
Look at Billy.
He
pays attention right there. Yeah.
Know your numbers.
Yeah. So that was not the Jerry program circa 18 to 20 years ago when John and I met, because I had zero clue how any of this worked. Yeah. And I had to figure it out by trial and error.
Yeah. But you had what you needed to be successful. You just didn't have that. You had all the other intangibles, which some people might have the greatest financial statements in the world, and they're missing everything that you have to do to get to the numbers.
To get the financials.
To get the numbers.
Right. Yeah. And I think that the financials and knowing your numbers is as much a part of the business as selling and getting the work done, but we equate selling whatever it is you have and getting the work done with employees as being the business. And really, like a balance sheet and a P&L, financials and operations have to go together.
Yeah. Your financial statement is the story of your business.
Right.
And that's why bankers look for multiple years. So if I just look at a balance sheet at the end of September 2019, okay, I don't know, maybe wrote a bunch of checks out, so your cash is low, your payables are low. But if I see that same balance sheet for 17, 9/30/17, 9/30/18, and 9/30/19, I can start figuring out, okay,
this is the pattern.
This is a pattern.
Right.
That's why bankers like multiple years, because 1 year doesn't tell you, is it sustainable? Is it recurring? Can you do this? And then, and again, not to get in the weeds of bore people to death, but then seasonality. Maybe you have a seasonal company, and then you're a
busy
hotel.
in the summertime, dead in the
You're a
wintertime.
hotel.
Right.
In Bend, Oregon, you're killing it. Well, Bend is probably unusual because they probably kill it during the winter too because of skiing.
Definitely.
But if you're at some resort town, the summer, you're spring through the end of summer, all your money's made, and then you just sit there and siphon off the money
Like
through the winter.
I always use the example of an outdoor swimming pool.
Yeah, there you go.
Right.
That's right. No one's in there February 1st wanting to go
You
swimming.
make all your money when the sun shines.
That's right.
Yeah.
So financial statements are important. They tell a story of the business, and if you can put them together year over year, you really start getting a sense of how the business is doing.
Right.
Are they, yeah, well, I don't want to bore people.
So
I can go on and on. But
let's
I'll
talk
bore
about
people.
my hatred for all things bank and
Yes.
banking and bankers is well known. You know about it, and everybody that listens to this knows about it.
It's not unfounded.
No, I don't think it is either. I think that I think, and so what I'm trying to do is educate people on this podcast about specific topics, and that's why I wanted to have you in. We've been talking about having you in for months, because I think there's this misunderstanding or this misguided understanding that banks are there to help you start your business.
Yeah.
And
no.
I mean, I know what the answer is, but
open your
you're
check-
the banker.
We'll open your checking account.
Yeah, that's helpful.
Yeah. Well, no, startup financing is the hardest thing to get.
Right.
And everyone knows it. In fact, if you're coming to me for a startup, we lend money. We're not an equity investor in your business. So you could have a great idea and you have a great plan, a business plan, you have projections, and I just need $700,000 to get it going. I'm like, yeah, you do. Yeah, you do.
Hopefully you have
it.
1.2 or $3 million in assets that we can collateralize.
And I am not, at that point, I'm an equity investor. It's not proven. You're not proven. I don't know. I mean, if you came, even in the best scenario, let's say you were a restaurant manager, general manager for a large, well-known restaurant. You've been doing it for 20 years, and you were the general. You operated the entire thing. You go, you know what? I'm going to do it for myself. I'm going to open my. That's the person you want to lend to. They know everything: food costs, labor costs, how to run it, hours, menu items, back of the house, front of the house, everything. Yeah. No, we're still not going to.
It's still not going to happen.
And people go, well, you know what? I'll do a franchise. That's what I'll do, because franchise will give me all the management that I need.
Still need the cash.
Yeah. Startup is just tough.
Right.
Expansion's different. If you had 2 locations, let's say you're you name it, franchise or even business, and you I'm trying to think of something. Nondescript business. I got 2 of them. I want to open a 3rd location.
Strip club.
Yeah, not eligible. Not eligible.
I understand.
I'm sure you have some equity investors in that. You wouldn't have to come to the bank.
Yeah, for sure.
But if you came to me for that, I might look at it. But I'm gonna look at the cash flow from your existing operations to support the 3rd one.
Right.
So it's not a startup. Technically, that 3rd location's a startup because it's brand new. But I'm going to use the cash flow from your first 2.
Right. You have collateral in the cash flow from the first 2.
I'll tell you, I get a lot of these calls because we've jumped around. But now, I never moved to Seattle. I went to Transamerica, and they were an SBA lender, specific SBA, and that's all they did. They went out of business for a year. I got hired at a bank called Borrego Springs Bank, no name bank, and since been purchased. But I've been doing SBA lending since '99, and specifically small business lending. And people equate SBA lending to, hey, I want to open up a lemonade stand on the corner and I need $7,000. I'm like, I don't know. Maybe that's what they used to do back in the day, but my average deal size is over $1 million, and it's for real estate. It's for equipment. It's for good businesses that might need the SBA assistance, lower down payment, longer repayment terms,
Mhm.
some other stuff, under collateralized business acquisitions.
Higher lending percentage.
Yeah. So, and without going into detail, so it's a little bit niche lending, but people think of SBA because we get this guarantee from the government as this mysterious, the government's guaranteeing it. So it's risk-free to you. So why don't you just lend me money on my startup? And I'm like, well, it's not risk-free. We're lending real bank money. So deposits, people come to the bank and put in their money, deposits.
Or the money they get for free are at a very, very low interest rate from the Fed window that they're supposed to lend to us, which they didn't, and they kept and reinvested it in treasuries at fucking 3.5% rather than giving it to us for the last 10 years like they were fucking supposed to.
Hey, come on now.
Now, Johnny knows I'm not yelling at John.
No, you kidding me?
Johnny and I have had these conversations 1,000 times, but I just want to be clear. Yeah, they lend us our deposits back, but for the last decade, they've gotten the money at next to nothing from us.
Correct. Figure it out. I mean, how much you get on your checking account? What's the return? I mean,
I
think you got to have $5,000 or $10,000 in there to even get 0.5%.
Yeah.
And I'm going to turn out and
if they even pay that anymore.
I'm going to turn out and lend it at 6%.
Sure.
So, but it's not. It's our depositors' money.
So everybody knows what I'm talking about. There's a Fed window that the banks can go to access funds that they can then lend out, and they pay the government for that money. They paid the government for the last decade or close to it 0%.
Well, Fed funds rate is higher than zero.
I understand it's higher than zero.
I'm not defending banks. I just know the money's there when I lend it out.
Forever, it was 0% after 2008 as a way to spur banks to then take that money and do what with it? Lend it to guys like us that go out and do something with it. What they did is they turned around in general and they reinvested our money back into treasuries because
the yield higher.
The yield higher. That's right. So they were playing cash arbitrage with our own money, us the taxpayer, on both sides.
That's what I wanted to do in '91 when I graduated.
Yeah, that's what we both should have done.
And I got
these fuckers just make a ton of cash. So my point in saying all that though is to say that the banks now, I mean, what are they paying? Fed funds rate or 2.5% or something?
It's low.
Yeah, it's low.
Our cost of funds is kind of how the bank views it is. We have a cost to the money because we have to pay not only depositors, but, brick and mortar. That's why you find more banks not going to brick and mortar. If you can do online banking, the bank loves it because, you don't have to have a person there and doors and security.
But
and
when people see they see terms like the Fed fund rate.
Yeah.
So that's a bank. Listen to that number because now you know what your bank, for the most part, is getting their money. A large portion of their money comes from what they're getting at the Fed window.
If you need it, you can get it from the Feds.
That's right.
Or we can get it from depositors for even...
And between banks as well, within that close to that same rate, correct?
What's that?
Like banks can lend money from other banks overnight for about the same
you can
price.
Borrow from other banks. It's a whole thing. It's that gets technical, but you're right. I think the key is money to banks right now is inexpensive. Whether it's
and has been for a decade.
It has been for the last, I thought about this on the drive over here. It's been 10 years that our economy has gone up. I mean, think about that.
Been on fire.
So there's business owners that I know now, let's say they're 40, and they started their business 10 years ago. Everyone got hammered in 2008. Maybe they had some job and they got hammered and they're like, I just need to do something. So they start a business. Well, they've not seen the dark days of the economy going south.
Right.
Restaurants, every restaurant, successful. I'm like, yeah, because everyone right now can afford a $16 cheeseburger.
Right.
And, or go spend with their family. I have a family of 5. I mean, it's $100 to go out to eat.
Every time.
I mean, this is Red Robin. We're not talking, fancy dinner. And I'm like, well, okay. As times are good, people are employed. What's our employment rate? In Oregon, I don't know. It's close to the national average.
2.5%, 3%.
So you go, wait till it's 8%.
It's funny when you say that too, because this is the largest extended period of growth that we've ever had in American history. And so Billy's 26. So he has no concept of what the downtimes were. He's like 13 when 2008 hit. And so you have these whole generation. Motherfucker, I started my business in 98.
Yeah.
I've been through 2 of them.
Yeah.
Yeah. Lucky me. God, I'm so retarded.
Well, I was kind of that way. The go-go, everyone was making money in the stock market up until 99,
right.
I believe.
Then,
you couldn't do anything. Everyone was a broker.
Didn't matter.
Everyone knew something. Yeah, just threw $1 in there and it became 5.
Right.
And .com busted in 99. And then it was the go-go 2000s with the real estate market. And, so everyone went from being a stockbroker. No, everyone knew the stock market, even though they knew nothing about the stock market. They knew they made money. And it was real estate. Everyone was a real estate mogul.
Mortgage broker.
They were financing it, buying it, flipping it, doing whatever.
It was easy.
When people refinancing their homes, their lifestyle, I drive through neighborhoods. I go, I do okay. I do all right. I'm not rich, but I pay the bills. And I look through these neighborhoods. I'm like, how is that person driving a $70,000 Mercedes, an $80,000 Porsche? They're paying $12,000 a month in property or a year in property tax. This is back in, these are 2005 numbers.
Right.
Maybe the cars were $40,000
because they got
145
20% of their loan value. Of
their
you know why?
House
with a no-check loan.
That home was $220,000 when they bought it.
Right.
And all of a sudden it was $450 in 2005, and then all of a sudden it was $600,000, $650, and you just refinance and lower your payment.
And you did it without Billy. No one checked.
Yeah.
Right. What they were called or what were they called?
They were no income, no asset.
No income verification. No verification loans. Whatever you put on the on your application, they just plugged it into the fucking into the deal, and away you went into the computer, and away you went.
Those are kind of coming back. I think
are they?
Well, a little bit.
Well, good. The motherfucking banks have their money for it so cheap.
That's right. They got bailed out, but
you know why I wonder? I think that's coming back to Johnny in a way. I think because I know the banks, because the amount that they're having to pay for their cash now has been higher than it's been over the last 10 years. They're having to get back into mortgage lending in order to get the margin that they're looking for.
Right. Exactly. And rates have been dropping.
Because banks haven't loaned on houses for, probably since 2008.
No. And they're trying to find yield somewhere. And I think you get farther away from the crisis. And banks have been, and I'm not a bank expert. I mean, I work at a bank, but I'm not, I don't know the ins and outs of the
I'm an expert on
finance.
the hatred of banks.
I know you're an expert. You have a PhD in hatred of banks. But the balance sheets are pretty strong at banks. I mean, the government has, I can't tell you what restrictions have been eased or anything like that. But, at 2008, all of a sudden you had to have capital requirements that were pretty stringent. And,
which means you had to have cash on hand.
You couldn't do one of these. You couldn't do one of these. Oh my God! All the bank assets are worth half what they are on the book, and you have
which is what happened.
2008 was dire.
It was ugly.
I was thinking there's two things that there's two things that people always need, or they're going to pay taxes and they're going to die, and so I'm like, I don't think I'm saying that wrong, but you're always going to pay taxes and you're going to die, and I'm not. Mortuary business was not, I'm sure it's very profitable. I've looked at some, but that's not for me. And so I became a licensed tax preparer just in case. I knew if the banking thing went to hell,
because in 2008, it seemed like the world was imploding. It was over.
I was still okay. In the bank I was working for, we were prudent. I was getting my teeth kicked in the 2000s. People were doing crazy stuff. And my bank was just like, just plod along.
They had their own money. That was an Indian bank, they had their own money.
And we used to sell it. We used to sell it and get the money back, sell and get the money back. So until selling the loan, the guaranteed portion. This is weed talk, but selling the guaranteed portion, those yields went down or those premiums went down. And there's this unguaranteed portion, and GE used to buy them all the time. GE stopped buying them, so we didn't have any depositors. We had Borrego Springs Bank, I don't know. We didn't have any depositors. You go find a Borrego Springs Bank branch somewhere,
right?
And you win a prize. But
didn't they have like an Indian casino money or something?
Yeah. So they're owned by the Viejas Indian tribe.
Right.
And they'd funnel us money, but that's where it came from. But, Viejas Indian, they had a huge business enterprise. The bank was just like a little, play toy for them. And when we couldn't sell our assets, we were booking good business to our own detriment because you need capital. I do $1 million loan to you. I need $1 million. Real dollars. I got to lend you $1 million.
Right.
Okay. Well, let's look over here. There's no depositor money over there.
There's no $1 million over there.
All our loans are paying as agreed, but no one's buying our loans.
Yeah.
So
You're not getting that
can't get the money
back in.
We're not getting the money back. So I'd lend you $1 million and we'd get a premium on $750,000 of it. So $750 back plus a premium. And then $250 would get no premium, but we get the $250 back because G would buy it at par.
Which is to say, if it's 5%, you might make 5.25% or 5.5% that you sold the loan for.
Yeah. So but we'd get all that $1 million back plus a little bit.
Yeah.
And then we went to get nothing. Well,
yeah,
almost nothing.
Relatively speaking.
So every time we booked $100 million that year, we'd have to find $100 million.
Yeah.
To lend.
And there was no money.
And there was no money.
And there was no money.
And the Indian tribe's like, I'm not sure about this bank thing. We got other things so we can use our capital.
Which is why one of the things the government did was to give banks money at 0% interest so that they would loan that money out.
Yes.
Yeah.
And I can tell you that we made good loans so our loans weren't bad. But my competitors, they were doing stuff, no no injection,
crazy,
no collateral. No work history, nothing, the old 5 C's of credit type of thing where you had to have cash flow and collateral and credit capacity and character and all. You just showed up with a semi-warm,
Banks don't give a fuck about character.
They've gone away from it.
Yeah.
I like it.
Yeah.
It's one of my top ones.
I'm sure it is for you, but.
Because in the business I'm in, I got to trust my borrower.
I just don't, and you can correct me. I don't want somebody hearing this, thinking about starting a business, got a good history, have made all of their payments on everything they've ever had, good job history. They start a new business, maybe it's 6 months old, and they're like, okay, I'm going to go get a loan. I'm not quite ready yet, but I've got good character. Because that doesn't mean shit when it comes down to whether or not a bank lends you money.
That is correct. So if we wrap this around to a small business, someone coming in and wanting to start up, I tell them, you have a job now? Oh, yeah, I do. I go, well, don't quit it.
Right.
So stay employed.
Yep.
I go, you got a home? Yeah. Go get a home equity loan.
Yeah.
Now, all this thing I'm saying is probably against bank regulation. Like you can't use a consumer purpose loan for business purpose.
Who would ever do that?
Don't ever do that.
Yeah.
All right. But
disclaimer, no one should ever do that.
That's right.
And I'd like to say right now that I never have, that I'm aware of.
I am not. Yeah, I'm not here representing any bank. It's just John talking
That's
in general.
Exactly right.
It's a friendly.
You weren't supposed to use your last name.
Oh shoot! Yeah, they'll figure it out.
And so that's the SBA, though. Again, I'm pounding on banks because banks only. It's true they only loan you money after you need it. That's been my experience. The SBA loans you the money when you need it or before you need it.
Yes. Banks always, people would say, oh, you want to lend to people that don't need the money. I'm like, no, we lend to people that need the money. And I'll lend to
the SBA does.
The SBA.
Yes.
I'll lend to a newer business.
Yes.
So to get back to startup financing, home equity loan, uncle, aunt, sister, buddy that's got cash, you kind of have to do it on your own. Credit cards. I had someone call me and they wanted like $17,000 to start their business. And I said, go get a credit card.
Right.
Oh, God, the interest rate. It's like 18%.
Yeah, it is.
Yeah. And I wanted to refer them to you.
Just go here. Done that.
Jerry.
I know that.
I go, that's just.
Try taking cash out on that credit card.
Well, yeah, is that
like
24%? There's no usury rate in Oregon. So, so they sat there and said, well, that's just way too high. And I'm like, do the calculation. Let's do the math. We did 17% on 17,000 and came up with the number. And I divided it by 12.
Right.
And I go, so you're saying, and then of course I'm going to charge you interest rate. I mean, you can come get a loan from me. Let's say it's 7% for this type of loan. So I won't do that small, but let's just say it's 7%. So the delta between 7 and 17 is 10%. So 10% on 17,000 $1,700 divided by 12, it's like $100 a month, a little over 100 a month. I go, that's going to stop you from
starting your business.
And then I said, then you shouldn't start your business.
And this is where, now this is perfect. I'm glad you said that, because we're going to come back to the SBA, but I'm always hammering on Dave Ramsey. You know who Dave Ramsey is?
Yeah.
Okay. So you know his
he's
program.
like he'd be like the opposite of leverage. He's like no leverage, no borrowing.
He's like the opposite of me.
He is the opposite of you.
And he's the opposite of every other business owner I have ever met. And I know lots of business
and
owners.
I don't think his target market is business owners.
Well, but yes, that's probably true. And like I say, and Billy will tell you, I'd say that I think he gives good advice for people who are working the 9 to 5.
Correct.
What he says probably makes sense.
Correct.
But what he says that makes zero sense, at least that I don't know anybody, which is that you can get into the business game about you can get yourself up and out and off and going and doing new things, not working that 8 to 5 grind like you don't want to because you want more for yourself. It ain't going to happen, though, until you credit card it, save the money up, borrow it from grandma, whatever it is. But I don't know. You can wait an awful long fucking time and miss those opportunities. And pretty soon 10 years go by and you're still working that 9 to 5, waiting to have all your debts paid off and 6 months worth of what's he say? Have a 6 month war chest, of your bills. Have 6 months of your bills in the bank before you go do anything.
Right.
I've never met a business owner that's ever done that. Have you?
No. And you said one key word: opportunity.
Yes.
That's what I was trying to. If this opportunity, I finance at reasonable rates. I'm not a private investor that's going to charge you 12% interest. My interest rates from anywhere between 5 and 7%. Let's just call that as a range. So that's not out of bounds. I've had clients purchase real estate with a variable rate. Nowadays, people are like, oh God, variable rate. They have a heart attack. No,
variable rate, just so everybody knows, is a rate that resets on some schedule of time based on whatever it's loaned against.
Right. In the SBA world, we base a lot of stuff off on the prime rate.
Right.
Fed funds rate goes up or down. The prime rate normally goes the same. And so prime rate plus a spread. And it's every quarter that can change. And there's been years where there's no change in that rate. And then as the economy heats up, it might jump a quarter point, half a point. And as the economy might tighten up a little bit, they'll lower that a little bit. But it's a pretty benign interest rate. It doesn't change daily. It doesn't change by a lot when it does change. It's just a little bit.
I was making some good bank when the crash hit because I was on a variable SBA for my real estate.
You had the lowest rate at the time.
Yes.
And I could never.
And it kept going lower and lower because the prime rate dipped down to what? Fucking 1% or something?
Well, no, prime was 3.25.
3.25.
Can I say what your rate was? I think.
Yeah.
I think it was prime minus 3/4.
Yes, that's right. That's exactly what it was.
And it was 3.25. But prime was like 5%. I don't know when we did the loan.
Yeah, whatever it was.
It was 5%. Well, it dropped. It was 3.25 minus 3/4. So you're 2.5.
2.5%.
Even today, the lowest fixed rates I've ever seen on real estate. Even today, I don't see 2.5.
That 2.5%, though, when it dropped from 5.5% to 2.5%, it was a significant amount of money on a monthly basis based on the multi-million-dollar.
This wasn't a $17,000 loan.
This was a $17,000 loan.
That's right.
That worked out really well. So you do SBA, and if somebody's looking to get a loan and their business is new or growing,
right?
Even if it's new, if it's existing, they should come talk to you, right?
Yes.
Somebody should go to an SBA lender.
Yeah.
Don't waste your time going to a bank, unless the bank has SBA lending, and then they're going to direct you there.
Yeah, and you know what? I like local banks or regional banks better than the big banks
or credit unions that'll do commercial
or credit unions,
right?
Because you're really going to get a person that you can talk to.
Yes.
You know what? They're all pretty good. You might get a dope somewhere, but you can assess that real quick.
Should I put my hand up right now?
Yeah. No names, right?
No names.
Okay. You're going to find them, but for the most part, they're going to sit there. They're going to take an interest in your business, and they're going to look at the financial statements, and they're going to be honest with you, and they're going to give you good advice. And I find that more in the credit unions that do business loans and the regional, state or regional banks. I'm trying to think of around here.
I agree.
Because you go to bank, nothing against Bank of America. I have accounts at Bank of America. But gosh, it's kind of a sales culture.
Right.
And they're just sitting there and they go, just fill this out. Give me the 6 things. I'm going to send it to somewhere, and they're going to do whatever they do. And then I'm going to tell you yes or no.
Yeah.
There's no consultation. There's no advice. There's no, I shouldn't say it. There probably isn't consultation or advice or anything that the person's going to tell you, because they understand your financial statements. They understand your business or your industry. And I think when you find smaller banks and you have someone who's in business banking there,
yeah,
they know what they're doing.
There's still
work with you a little bit more and talk to you, explain some things to you.
Yeah,
there's still I think I'm looking forward to the online banks continuing to move forward and do what they do, because I want to be evaluated by an algorithm rather than be evaluated by a human.
You prefer that?
Yeah, because the humans, again, they've gotten it wrong every single time with me. So if you went by my banking history, I've never missed a payment.
Right.
Ever. Right. And I've been in business now 21 years and I've never missed a payment. But when I want to go get a loan, it's like I'm starting all the way over again.
Well,
every single solitary time.
My biggest
So it means nothing that I have all of this history and have done all of these things. Algorithmically, I think that they're going to be able to use that information more efficiently than the humans do.
I think you'll find that now with credit up to $100,000, $100,000. Bank of America was actually a leader of this, in my opinion, back in the early 90s, where they had the formula. And now it's just gotten so much better, where they can figure out, okay, if you're a homeowner and you live here and you've worked this long and you're married or not married or, whatever, I don't think you can lend based on those criteria, but they'll assess how much in revenue do you do, how long you've been in business, your checking account, your credit score, all these things. They can predict fairly accurately how much you're gonna, your ability to repay.
Yeah.
And a lot of banks do that now with you could go in right now and get an unsecured $100,000 line of credit at a bank.
Right.
Based off of your credit score, how long you've been in business, do you own a home? I don't know what else they might look at.
Right.
Age. These are probably things that I'm not supposed to. Can't discriminate based off of age, home ownership, anything else. But I'm just saying, all these variables get plugged into a computer, and the computer goes, yes or no, just yes or no.
Yes.
And they kick them out, but they haven't gotten to the point where they can do that with larger. I think when the deals get larger, people get a little more. If a bank loses, if you go out and spend $100,000 in the bank and you don't repay, which would be completely against your character, because they would have looked to see that you've historically paid. If someone pays their bills for 20 years, they don't stop paying their bills. Unless there's something catastrophic, illness or something like that. But flip side, if you haven't paid your bills for 20 years, you come into me and want a loan, what are you doing? What are you doing?
You're going to.
Yeah.
Well, and this is where, because we just have a few minutes left, the SBA was put together essentially to the Small Business Administration was put together in order to help facilitate growth in companies that are largely unlendable to or can't get the kind of money that they want to. Newer.
Here's a good example.
But if you're an established business, I mean, if you're a 5 or 10-year-old business and you've never heard of an SBA loan, you need to do your homework, because even for established businesses like me, I try to take advantage of that all the time because it's more expensive on the loan costs.
Yes.
But over time, the interest rate might be lower, and the down payment and the margin, the equity is higher.
Right. And I've had people, I got back to that opportunity. You're right. SBA. I've done an SBA loan to a company that's done 30 million in sales, 50 million in sales.
Sure.
They just didn't want to use their capital. They want to tie up their capital in a down payment on this building. So where the commercial banker wants them to put 30% down, when you're buying a $5 million building, 30% is a lot of cash.
Sure.
And I go, okay, well, I can do it for 10%.
Right.
And they go, oh, okay. Yeah, the fees are a little bit higher, but yeah, we'll save 20%, save $1 million in capital. We'd rather have the $1 million in our company. And SBA will step in and, like you said, lower injection, higher loan leverage, Dave Ramsey.
Yeah.
The anti-Dave Ramsey.
The anti-Dave Ramsey.
Yeah.
And I don't know.
But we'll do that. SBA will do that.
SBA will do that. And that's why just if you don't have financials, get some together and go talk to somebody.
That's right.
Find an SBA guy and they will help you. I think the flip side to this, I've been pretty negative about the banks, particularly on the SBA side, is that those guys like you, are here to help. So if you throw together financials, but you're not very good at it, right? You're going to be able to pick that out and say, is this true?
Correct. We'll ask the right question. We should be asking the right questions.
And then you go back and you look at your own books and you're like, well, no, fuck, it's 10 times that revenue. I can tell everyone, if you go in, have a tax return. Yeah.
Like it's kind of like have a tax return. That's verifiable. We can verify that with the IRS. Have a tax return and have it be somewhat profitable. I mean, if you come into me and you've lost $80,000, we're kind of back in that startup phase.
Unless you have collateral.
If you have collateral, you have options.
Right.
It may not be SBA. And if it's real estate and if you have real estate collateral, you can get into other options for lending.
Right.
But banks always like cash flow to repay loans. We do not want to liquidate your collateral.
And on the bank side, now I'll jump back onto attacking banks again.
I'd get you back there.
The way that the SBA, and correct me, I think I got these numbers right. The government guarantees is it 90% of the loan or 100% of the loan?
75.
75% of the loan is guaranteed. So the banks, when they make $1 million loan, they only have exposure on $250,000. But let's say that you're putting 10% down, which is typically what you have to do. So now it's $900,000, right?
Well,
and they have exposure on 75% of $900,000 on $1 million loan.
Right.
And should the loan go tits up, the government comes in and buys the loan and pays the bank out?
No.
Okay.
So that's why people come, hey, it's a risk-free loan. You're getting a 75% guarantee. We view it as insurance. It's the bank is lending you the $900,000. It's $1 million purchase. You put $100,000 down. I lent you 900. So I don't know what 75% of 900 is, but
whatever the math is.
I have calculators for that.
Yeah.
If you defaulted in year 2 of that, we would have to go through the whole liquidation process before we could send a request to the SBA to get a guarantee. So they call it the deficiency. So I got to go out there, come after Jerry, liquidate his building if it's a building, pound on him about any additional collateral. And then we're all done doing that. You might have $100,000 that wasn't covered because, the building, we had to sell at a discount to get it out of there. They will guarantee 75% of the deficiency of that 100,000, and we'll lose 25,000. But just like insurance, you have insurance with Allstate. You get in a lot of wrecks, and you go to Allstate to keep saying, "Hey, guess what Allstate does?" They go, "We're not insuring you anymore."
So you go through all that, though. At the end of it, you get your $100,000, and the government then has to come after you for the difference. Has to come after the
75% of the $100,000.
Well, 75%.
75% of the deficiency.
Yeah.
And the government can or cannot go after the guarantors after the remaining amount. But I guess what I'm saying is, we don't want to ask the government for that guarantee. We will, and we have, and we do. But if you do bad loans, the government won't allow you to do SBA lending anymore.
Right.
And so we want to do SBA lending. So one, we don't want to, so we do good loans. And then if you start thinking about it, if we have a lot of people use SBA, let's say you and I were partners, you wanted to buy me out, and the cost, let's just use the $1 million. You're buying me out of the business, doesn't have really any assets, good cash flow, and it's worth, my 50% is worth $1 million. SBA will finance that. They'll give you $1 million to give to me, and I'm out.
Mm-hmm.
And that $1 million isn't secured by nothing. I mean, accounts receivable and inventory and desk and chairs, nothing. Well, then the bank starts going, okay, now if Jerry defaults in year 1 or year 2, we're going to have $900,000 out to him, and there's no collateral. And then if we do 75% of the 900, hopefully we did everything right, and the SBA will pay us that 75%. They'd love to get you down to 50% or 30%, or not even allow the guarantee.
Right.
But writing off $250,000 as a loss to the bank, even a $28 billion bank or a $60 billion bank,
it's
or
a big number.
It's a big. You just don't do it.
You just don't.
So that's why startups are the most risky, and that's why banks don't like to lend to them. But newer companies with good metrics are something that the SBA will lend into. But people have to be, when you come to a bank, be understanding that you gotta have cash.
It's not to get you going. It's after you've proven yourself a little bit.
Just not too long, 18 months into it.
Yeah,
and then you're doing well, and you can see that everyone's doing well. Well, we'll be a part of it.
And I think doing well is a relative term. I don't know that most people that are 18 months into their business know whether or not they're doing well based on an SBA lending standard. And that's why I want to encourage people to just go talk to a banker, and particularly an SBA banker.
That's right.
Yeah.
I think that would be the first start, especially if you're new in business.
Right.
Yeah, that's a key, and it's a great product. I mean, it's everyone in the 50 states has an SBA lender.
Yeah. I've used it. I don't know fucking how many deals have we done.
In Portland, there's 51 of us that have done SBA loans here in the district.
Right.
And there's not 51. I can't even name 51 banks.
Yeah.
Right. I mean, there's non-banks, and there's all sorts of people that do SBA
I don't know
lending.
very many business owners that didn't get an SBA loan.
Yeah.
Right. I know. In fact, I can't think of any off the top of my head. It's just in my CEO group, that's the topic of conversation. It's always, you can get a conventional loan, but why would you, particularly when it's 70% versus 90%?
Yeah. And I know time is short, but on that opportunity, I have a specific example where I did a floating rate to somebody. We discussed a floating rate, prime plus a spread. And, everyone wants a fixed rate, so they know what their payment's going to be. He knew what the opportunity was on the building. 4 years later, he sold the building for $2 million more than he bought it for. And he thanks me. He calls me up and goes, "I'm so appreciative of you financing this opportunity for me."
Right.
He didn't care about the interest. The interest rate wasn't bad. It was fine. It just wasn't a fixed rate that everyone wants. And had he skipped that opportunity, like you said, you hear people not doing stuff because no, that's not the right time. It's not this, it's not that. If he wouldn't have gotten the SBA loan and said, "No, that variable rate's just not for me. I'm going to stay where I'm at."
Yeah, it's madness.
$2 million. Now, it's a great real estate market in Portland, and the timing was right. But he identified, he wasn't concerned about the interest rate. He was just going, "I have this great opportunity. Can someone lend me some money?"
And it's all relative. If it's $17,000 at $100 a month, right, at 18% interest, why do you give a fuck? For me, it's also the same if it's $170,000. If the opportunity to make X is there,
correct.
Yeah.
I mean, you don't want to borrow $1 million at 17% interest unless the opportunity was
unless the opportunity is so gigantic.
And if it's not a great opportunity, then why are you looking at it?
Yeah. No, that's exactly right. Yeah. Because we all know why. Because people are emotional and they think that the flowers that their grandma grows are the greatest thing we've ever seen. Dude, that's got to be like an hour plus.
Hour 12. Not
God
bad.
damn it!
It
goes.
Did I ramble too much?
I don't think so.
I think that was great.
Did you learn anything, Billy?
Yeah.
Yeah. That's the whole point of the thing. That's the whole point, was to bring you in, because I know, as somebody who did not understand banking, used to hear all these terms all of the time, right? You listen to the news on the radio on the way to work or the way to school, and they're like, the Fed fund rate today is, and you're like, what the fuck does even,
who cares?
What does any of that mean, right? Gold is at $357 and silver's at $38, and the Fed fund rate is, and you're like, the fuck does that mean? For me, I like knowing what that means. I like knowing what those terms are. But then for anybody's a prospective business owner or a current business owner, you know what to expect. And what I want to blow up is this myth that the bank is going to be there for you when you get there or when you start. But once you get going, the bank's probably not going to be there for you, but you have a better chance with the SBA.
Yes.
Yeah.
That's good.
Beautiful. All right. That wraps up this episode. Dude, my eyes, I might have to read this. How long have we been reading this? And my eyes, Johnny, are getting...
Are you blind?
They're going bad, man. I should say
we're the same age.
Yeah, we are the same age. I should say because I am blind in one, so I'm handicapped, so don't make fun of me.
Well, I can't believe I lent to you.
Seriously.
That's horrible.
No, I mean... I used to be able to read this, man. It's happening
That's all
quick.
right. It's
You'd
mine
think
too.
130 later, you'd just have it memorized.
Yeah, I
You
know.
wouldn't have
That's
to
why you
read
write
it.
it down. I
but-
don't have to waste all the space up here.
Thank you.
Yeah.
Appreciate that. See, young buck over here can remember shit.
I need
That wraps
glasses.
it up. Thanks everybody for tuning in. Be sure to check us out on YouTube, Instagram, Facebook, iTunes, Google, Reddit, Spotify, Jerry Brazy on all of them. Send us your questions to questions@jerrybrazy. And remember, you heard it right from the banker today. The guy's been in the biz. How long you been doing it?
20 since 91. What's the math?
Shit, I don't know. I can't do that kind of
long
math.
time.
What are we, geniuses?
A long time.
28
Yeah,
years?
no, that's 30
Nine?
years
I don't
he's
know.
been at it,
Long time.
and you heard him say the word opportunities multiple times. John, I always read this as I go out. This is like the saying that I tell everybody is: remember, opportunities are everywhere, but you got to go get them.
That's correct.
Peace.
Peace out.
Boom.